Hey everyone, in today's video, I want to talk about the three strategies, which is the home equity line of credit. Second, which is the home equity loan. Third one is cash out refinance. Talk about the pros and cons about them because you can use these three powerful strategies to access the equity and level up your investment portfolio tax free. And most importantly, you can use these as a tax deductible, which is like a win-win situation. So if you are a real estate investor, if you are a stock investor, or you're just an aspiring investor looking to grow your investment portfolio, you got to check out today's video because who doesn't want to know how to access more capital? It's always good to know, at least to have in your back pocket. Now, before we jump into the three strategies, I got to talk about how do you know how much equity you have. The simplest way is knowing your home value, okay? And then checking out your mortgage balance. If the home value is much more than your mortgage balance, then you have some equity available to access, okay? So for example, if your home is worth $1 million and your mortgage balance is only $500,000, then you have an equity value of potentially up to $500,000. So who doesn't like having access to this capital? Hello, yeah. Now the first strategy is the home equity line of credit. Now how this works is essentially like a credit card. So you get a loan against the equity you have available in your home in a form of a line of credit, like a credit card. And it literally will be like a line item against your mortgage, and it'll say a home equity line of credit. It's just like a credit card. So you don't have to use it unless you find that amazing investment property that you want to jump on, or maybe you find that amazing stock investment, or you want to level up your stock portfolio by selling some cash secured puts. Well, this is a great way to access that capital when you need it. And my favorite part about HELOC is that you don't actually pay any principal payments. If you start withdrawing that cash from your HELOC, you only pay interest payments only. And most importantly, these interest payments are tax deductible. So not only can you get access to the equity tax free, but you could also get it tax deductible. Now, the reason why I say it's tax free is because you actually don't sell your home to access that equity. Because typically if you sell a rental property, you get dinged with capital gains, and that's a tax. So you get taxed on it. But this is an opportunity to get access to the equity tax free. So what are the pros and cons with a HELOC? The first pro is that you only have to pay interest payments only. So whatever money you withdraw, you only pay interest payments only. You don't have to pay principal payments back. Number two, whatever amount you do withdraw from your HELOC, you only pay the interest payments on the amount withdrawn, not the balance of the HELOC. So if you have a HELOC of $500,000 and you only withdrew $100,000 to go buy that next investment property or to make that investment with your stocks, that you only pay interest payments on the $100K that's withdrawn. Number three, you can access this equity tax free. Now, what are the downsides of a HELOC? Number one, okay, if the interest rates change, then your payments in your HELOC will also change, because typically the interest payments on a HELOC is always more expensive than your mortgage balance, okay, your mortgage loans. So if you think interest rates are going to start rising in the future, well, then your interest payments on your HELOCs are also going to get more expensive. Number two, okay, if you are not disciplined, like you have credit card debt and you may overspend, or you may miss a payment or two or many in your HELOC, then don't open a HELOC, because the lender can immediately close your HELOC, ask you to repay, or freeze it. So this is like a no-no. If you're not good with managing your money and debt, don't open a HELOC because you may overspend. Now, the second strategy is the home equity loan, which is essentially getting another mortgage against your rental property or against your home. So you're going to have a second loan against your home, using your home as collateral. Now, typically with a home equity loan, you have a fixed term and you have a certain interest rate. So if it's a 30-year mortgage loan, say second mortgage, well, then you have 30 years to pay it off. And then your interest rates is determined by your lender. So you have fixed payments. Now, one of the big advantages of a home equity loan is that you get this big lump sum of payment that just is in the form of cash, okay? Literally, it's like cash just in your bank account and you can do whatever you want. But let's talk about the pros and cons with it, okay? The first pro is that obviously you get this big lump sum of cash, which you can use for investment purposes, and write it off as a tax deductible. Number two, you can fix the payments and your monthly payments so that you know what you need to pay every single month. So you don't have to worry about variable interest rates. You don't have to worry about the payments changing all the time, like your monthly payments. It's a fixed payment. So you can literally lock in your payments and it's predictable. And as long as you pay it, you're good to go. So what are the biggest cons with the home equity loan? The first con is that, well, you get this big lump sum of payment and then you have to do something with it. So if you get this lump sum of payment and you don't use it for investment purposes, then you're going to have to pay all those extra monthly payments for no reason at all. So make sure you know what to use that money for, and make sure that when you're using it for investment purposes that you really consider the home value, because if the home values drop, well, that loan is going to work against you. Now, the second biggest con is that if you get this lump sum of payment and then you go and buy an investment property, let's just say it's a rental property. Well, if you secured a first and second mortgage, just make sure that you can have enough rental income to pay out those two loans, because a lot of investors make this mistake of using a home equity loan to buy another rental property, but it makes all the properties negative cash flowing because they've maxed out their home equity loan. So just be very careful. If you do use this as a second mortgage and then use it to go buy next investment property, make sure that next investment property cash flows more than enough to pay out your second mortgage. Now, the third strategy is called the cash out refinance, which is essentially if your home value has gone up and you have a lot of equity in it, you can refinance your entire mortgage to a new mortgage and they get a lump sum of cash sitting in your bank account and you can use it for investment purposes. So the difference between the cash out refinance versus a home equity loan is that you only have one mortgage payment, versus a home equity loan, you would have two mortgage payments, okay? It's just two loans versus one loan. So I actually prefer the cash out refinance than dabbling with the home equity loan. It's just more complicated, but let's talk about the pros and cons with a cash out refinance. So what are the pros and cons with a cash out refinance? The first pro is that you only have one loan to worry about. So it's super easy peasy rather than worrying about two loans and two different payments like the home equity loan. Second pro is that you have these monthly payments and they're predictable. So you can set the interest rates, you can set the terms, and literally it's easy peasy. It just withdraws from your bank account every single month. So just make sure you pay it. Now, the third pro is that the interest rates for a cash out refinance is the most competitive because it makes sense. It's only one loan instead of the home equity loan, which is two loans, versus the HELOC, which is a line of credit, like a credit card against your home. So the lenders are willing to give you a much better interest rate for only one loan. So what are the downsides? Well, the first downside is that, well, if you get a cash out refinance and you don't have an investment property or an investment to make it, then you just got a lump sum of cash just sitting in your bank account doing nothing. So make sure if you are doing cash out refinance, you know what to use that money right away. Otherwise, you have all these extra payments and it's kind of like money down the drain. Number two, the second biggest con is that, look, if you get a cash out refinance, it's great to get this lump sum of money, but what if home values dramatically drop? Well, unfortunately, you got a big lump sum payments and now these home values are working against you. So a great way to mitigate this is just make sure you don't max out your equity all the time. Just make sure you know what portion of the equity you need for that next investment that you're making, and that's it. Don't ask for more. Now, in order to qualify for a home equity loan or a HELOC or a cash out refinance, you always need these three things. The first one is a good credit score. Typically, lenders will want at least at least a 740 credit score. So you need to have a good credit score because it shows your credit worthiness, that you're able to afford payments. Number two, they're always going to want to know what is your debt to income ratio. As much as these lenders make a ton of money lending you money, they want to know, hey, not only can you afford it, but they have a really precise way of calculating whether or not you can afford it, which is determining how much more debt you could take on versus your income. And their rule is typically between 40 to 50%. And every lender seems to like handle this differently, which is why I always go to my go-to broker, Streetwise Mortgages. So if you're looking to tap into your home equity, either through a home equity loan or through a HELOC or through a cash out refinance, please, I highly recommend speak to Streetwise Mortgages. You won't regret this. Number three, you need to know how much equity you have in your home, in your rental property. So make sure that your home value or your rental property value is much more than your mortgage balance. And that will determine potentially how much equity you can borrow up to. Now, every lender has their rules, like CIBC, Bank of Nova Scotia, every one of them has their specific set of rules of how much equity they lend out. But typically the rule of thumb is 65% loan to value, or some lenders, they may loan up to 80% loan to value. But again, just talk to your lender or talk to your broker or talk to my broker, which is Streetwise Mortgages. So you're probably thinking, well, which is better, a HELOC, a home equity loan, or a cash out refinance? So it really determines the best way to answer it is really ask yourself, when do you need this cash? How much and how long, okay? Because if, for example, I like using a HELOC because I actually don't know when I'm gonna use it. I don't know if I will ever use it, but I just like having access to that capital. Well, that's why I have a HELOC. Maybe you're a developer and you have a property that's like a vacant land and you want to build a home, then you need a big lump sum payment. So maybe you want to look at a home equity loan or a cash out refinance. Or maybe you are like, you have a really high interest payment on your existing mortgage right now and you want to change the terms and the rates. Well, you may want to just do cash out refinance and you have a big use for this big cash out, which is to buy that next investment property. So maybe you have this investment property or this big investment opportunity that you really want to make, but you don't want to touch your existing mortgage balance in your properties. Then you may want to look into a home equity loan because you really already have a really good terms and rates with your first mortgage. Then you could go out and take out a second mortgage, which is one of the reasons why people look at a home equity loan. Hey everyone, what are your reasons for choosing a home equity loan over a HELOC or over a cash out refinance? Please comment below. Maybe I missed something. Let me know. I'm always wanting to hear from you. Anyways, I hope you found this video so helpful. If so, give me a thumbs up, smash that like button. If you haven't subscribed, please subscribe to my channel. I release videos every single week about stock investing, real estate investing to help grow your income, build your wealth, and help you design your ideal life.